What's up traders, Tom here with another video. Today we are discussing the most recent news about the stock market, our thoughts ahead of the printing press Jerome Powell speech, and sometimes the stock market reaches a point where a big move is about to happen. Have we reached that now? Stay tuned. So today we will discuss the S&P 500, the Nasdaq, Apple, and the US dollar index from a technical analysis standpoint. And we're going to be going into some very interesting concepts that I think everyone's going to get some value out of in terms of the way that we approach trend lines and we approach price action when looking at technical analysis. I'm a big believer of keeping it simple, or the KISS principle, and that you need to think about, can I trade this on a replicatable idea over time? If you like our videos, make sure to give them some support by liking the video, subscribing, and of course hitting that bell. Quick market summary. It looks like we have a bit of a sea of green. The VIX is still really high at 33, but is going down. And all markets are up ahead of the speech. We also have some pretty heavy movements in crude with 2 to 3% moves overnight. On the printing press Powell, it's important to know, and if you're a new member of this channel, make sure you have an economic calendar. We have the Fed Chair Powell speaking tonight. Whenever he speaks, the market moves. And if you're scalping or you're trading in the smaller timeframes and you're not aware of his speech, you will see increased volatility. So make sure you have one. This one's from forexfactory.com. Another day, another giant virus recovery fund to prop up the economies and prop up, of course, the stock market. In terms of what's happening in the EU, people are starting to question a little bit what exactly all of this money is doing and how much money they are printing out of thin air. There's a lot of money and someone will have to pay for it. So now that people are, I guess, getting paralysis with all of this idea of this crisis around us, we are starting to question, what the hell are we going to do when it comes time to pay down these debts? And I think this will be an ongoing concern for many economies around the world. I need to bring up this story because it's so important to talk about it. And that was that unfortunately a 20-year-old college student has died after seeing a massive negative cash balance of $730,000 in his Robinhood account. Now, it looks like this is probably a mishap, but this particular person was trading options contracts. And I assume they were probably trading sold naked option puts. It makes the most sense because it may have come off that big fall last week. When you're trading options, you must understand the contract. Am I a big fan of options? Yeah, I love options. I think they're great, and they're great when they're used. But always consider your risks. And we talk about on this channel, none of these new traders, or a lot of traders, are not considering risk versus reward when it comes to trading. There is a huge risk in everything that you do if you do not understand it. So please be aware of that and consider the risks when you make the trades. It brings me straight into this story. 1,450% rally on a bankrupt company fueled by Robinhood traders. And this is the problem. These people will lose money. They're going to lose money. It's not going to be successful for them unless they get out and run away. They're basically buying something that cannot be sustained. And that's why insiders are dumping this particular share and taking advantage of the situation. They're probably thinking, how great is this? Next story is about the VIX. I think this is a great point. This is from Cantor Fitzgerald. And basically they've said that before there's a vaccine, we will not see the VIX under 20. That's good news for volatility traders in terms of people that want to see big moves and actually trade the markets, because vaccine could be longer away. And of course, that will see elevated big moves in the market moving forward. What direction? Well, we've mentioned on this channel, it's a kangaroo market right now where there's up, down, and all around in all sorts of currencies and stock market indices. So I think we're going to continue to see that for the next 12 to 18 months. The stories keep coming out where it's like bad news becomes kind of less bad news. And also these stories of the stimulus going into the economy. So people in Australia are actually spending huge amounts of money using the stimulus that was given to them by the government. Same thing happening in the UK, same thing happening in the US. So people are thinking that the government has their back on all cases, and they're not really thinking about the future of how tight things could become if unemployment goes on at a massive level for a long time. So these numbers may be propped up for now, but we'll have to see what happens over the next 3 to 12 months because it's going to be very interesting times. So as promised, let's get into the stock markets and talk about what's happening. So first thing I want to mention is I trapped the stock market, and I'll say trapped in inverted commas, before this video. So we've seen here that it has moved a little bit since the trap. Now, would I say this is a buy signal in terms of it's moved out of my two pretty well drawn trend lines? Well, you could say yes, but the thing is with these trend lines is you must be correctly identifying trend lines. And you must have multiple reasons to be in any trade. Remember, I always say on this channel, you need 3 to 6 separate reasons to be in a trade before you get into it. Now, I'm not a huge fan of trend lines as much as other people. And that's because often what happens is you'll see someone's chart and they'll draw a trend line here, they'll draw a trend line here, they'll draw all these crazy trend lines, and then they say, oh yes, see, I'm trapping price in here. Well, who else is seeing those lines? You've got to think about it. Who is actually investing off those levels? I'm a massive fan of horizontal support and resistance. And the reason why, number one, it's easier to spot. Number two, it takes into account incredibly key levels, which you can sometimes see. Remember, we were talking about the S&P 500 has bounced off 3,000 support, a key psychological zone. We can see that on the horizontal resistance becoming support and role reversal. We can also see that this particular 3080 very easily trapped by the body. So the body closes are the most important part here. And then they acted as support or role reversal for the wicks. So if you were trading, I've told a lot of people on this channel, if you're trading long bias and you're just getting in off this horizontal support, which we covered earlier this week, well, you've got a nice amount of points here. You could potentially make 50 points every night very easily, taking it back up into kind of this little zone up here and then getting out. And you know as well that you have the Fed backing you in terms of there's a bias in the market towards the buy side, at least currently. So I love horizontal support resistance, and I'm a big fan of using that over trend lines. Trend lines have their place, but you must correctly identify them. Hopefully that makes some sense. So let's now take a look at Apple. And I've said it on this channel before, Apple is a good stock to look at from a technical analysis standpoint because it's so big, and often the sentiment on Apple and the sentiment on these tech stocks, if they turn bad, as in they turn sour, it will push the rest of the market down because of their massive cap size. And on top of that, it shows that the market is thinking they're overvalued. And if they're overvalued, everything's going to drop, if that's the perception. So Apple here has basically made a very slightly higher high, and we'll call it around the same. So the interesting thing on the MACD indicator, and this is the MT4 MACD indicator in trading view, if anyone wants to know, is basically we have a level of resistance that's been reached, and we have a lower mark on the histogram, and that's showing Class B MACD divergence. Is this important by itself? It's just an indication. It's not enough. But we can take that a little bit further by then thinking about what this pattern is really showing us and what is happening right now. So many people will probably be saying, well, this could be a double top. And yes, it could be. In technical analysis, you're playing chess with the market. You're trying to find things before they occur so you can predict things that will happen in the future. Obviously, we want to be analyzing the charts and have no bias if possible. And then as we see the market come back down, we recognize this is a double top, and therefore it would be the end of a trend and the start of a new trend. If this was to occur, we would basically go past 330, go down ideally and close below, showing us the confirmation. And then the market would hopefully come back up, test the 330 zone, giving us a conservative entry. And then, of course, we would look to the downside here. Until the market really gets below this zone, I don't think it would be a strong enough signal. but it's the type of process that we like to look at on this channel. Another thing I want to note is that this 50 EMA has held this very nice uptrend for Apple and will probably continue to hold it until the trend changes. So we're putting together the idea of the double top, the weakening MACD, and on top of that, if it got through this zone, the change of trend that is probably occurring on all of the smaller time frames. So it's that thought process and why I like to look at some of these stocks. They lead towards giving us indications on the general broader market. And if they all sync up with each other, it's even stronger signal. So always think about that. We'll do a very quick synopsis of the US dollar index because I think it's very important for risk on, risk off sentiment. So US dollar index is hitting that 97.50 resistance. It's continued to find at resistance. We'll see tonight whether it gets through. I would say it's moving towards this point in anticipation of the news event. A big lesson I want to tell everyone today is that market generally moves towards a resistance zone in anticipation of a news event, and then the news event breaks it above or sends it down, but it will usually gravitate to an important zone before something happens. Quick point on the Nasdaq, we have gotten through 10,000 on the futures right now, and we're about to reach potential new highs. At least the body has never been above 10,100. Again, is the market reaching this point in anticipation of the speech? I would say so. It's one of those times where you're going to see a big move because you've got Jerome Powell coming out. He's going to say something. The market might say, okay, we don't like this. Doesn't matter what it is. They might just not like it because then they start saying all these other concerns are coming in and then it sells off. Or maybe they come out, they use some Fed bazookas and it goes up. We'll have to see, but again, it comes to these key points ahead of the news. It always does this. So our thoughts on the US 500 remain very, very similar to the other videos we've done. We want to always go to a daily, ideally. I'll just quickly get rid of these. And we want to think about the key resistance and supports. So we have key resistance at 32.30, and we have that key support range, and this is a range between 3,000 and 29.50. If the market is to come down and it gets through this range below, we would expect it to return up and then further bearish sentiment to come in where it would go between the 2,800 and 27.50. It will fill that gap quite nicely, and we talked about that in yesterday's video, so definitely go check that out. If it gets above, then we'd expect it to do a very similar thing and then go on to test new highs. And then we will cover this on the channel where we expect it from that point. In fact, if it goes to the high, that's usually where you're going to see a huge amount of profit taking and a decent pullback. But time will tell what happens, and a lot of it will be based on the Fed's decision over the coming weeks. I have a great video for tomorrow as well, talking about what the insiders are doing, so stay tuned for that one. Hopefully you've enjoyed today's video. If you have, remember to smash that like button, and on top of that, subscribe and hit that bell to help support the channel and help support what we do. We do appreciate it. Happy trading, everybody, and have a great weekend. Bye.